Hello friends, this video we would cover the snapshot of the events coming forward and the market outlook for a couple of months. First, we have US elections which are due very soon, which might have a sentimental impact and a sharp swings can be seen in the market. Whoever is elected does not actually matter to you as an investor, but the downswing is a great buying opportunity for us. Moving forward, we might find some kind of interest rate hike by US Federal Reserve and even other central banks of the developed countries. This might have a negative impact on the foreign currency in the country. Now let us understand how interest rates affects the returns of the foreign investor. We would compare interest rates of the developed economies with India. Many developed countries have interest rates very close to zero, and few countries have negative interest rates. This would create a spread of 8 to 9%. Assuming that rupee depreciates at 5%, the real risk-free rate would be something around 4%. Indian economy is into a reducing interest rate cycle, whereas developed economies plan to increase their interest rates. This would eventually reduce the risk-free potential returns for the foreign investors. We might see some outflow of forex, which might have a negative impact on the stock markets. Many institutions who invest into Indian stock market have their financial book closures on 31st of December. Mostly these are FIIs investing in India. So to show healthy profits, they might book the profits in the developing country like India and take off the cash back to their own country. Another factor is the domestic as well as a fundamental factor. The price to earning ratio of the index is quite high. The domestic earnings of the companies are not that good yet. We still are waiting for the earnings to improve, and once that starts we would find a huge re-rating of happening and the price to earning ratio improving. Index is trading at something around 23 to 24 PE, and historically we don't sustain the around these level. Now let's see the technical view of the market. Technically, the markets are done with higher tops and higher bottoms. And we have just started with the lower tops and lower bottom pattern. We might correct up to 8,100 or may even 7,500 or even up to 7,200. We might correct up to 8,100 or would be 7,500 or might be 7,200 on Nifty. But there is no big reason for us as an investor to worry. Be focused on what you want and use the opportunities to build your portfolio strong. Please understand, we are into a business friendly environment and everybody is talking about growth. It's not just the government. We are seeing corporates having capital investments done all over the country. The capital investment help us to create employments in a country and make a more stable economy. I would suggest invest boldly when the markets are in panic. You'll definitely enjoy your old age like a picnic.